American Eagle had Wall Street buzzing with its latest earnings report. Profits way up, share prices down they went. It's a classic case of the market focusing on one number while ignoring another. American Eagle crushed profit expectations, seeing a surge of almost 60%, but sales didn't hit the mark analysts were hoping for. Investors often fixate on sales figures, and when those numbers disappoint, they can hit the sell button. Despite the fantastic profit news, the company's stock took a dip in early trading. It just goes to show you that the market can be a fickle beast. But for those of us who care about the bottom line, American Eagle's profit surge is a very positive sign. It shows that the company is managing its expenses efficiently and squeezing more profit out of every dollar of sales. The million-dollar question is, can they keep this balancing act going? Can they keep those profits soaring while finding ways to reignite sales growth? That's what we'll be watching closely in the quarters to come. Let's zoom in on those sales numbers for a moment. American Eagle reported an 8% increase in sales, reaching $1.29 billion for the quarter. Not too shabby, right? A calendar shift added an extra $55 million to the quarter's sales. Even without that extra week, American Eagle still showed solid growth. Their Aerie brand saw a 9% revenue increase. The core American Eagle brand posted an 8% revenue gain. The back-to-school season also played a part in these results. Now let's talk margins, baby. This is where American Eagle really shines in its latest earnings report. Their gross margin, a key measure of profitability, expanded to 38.6%. That's a 0.9 percentage point improvement from the previous year, and right in line with what analysts were expecting. What's driving this margin expansion? In a word, costs. American Eagle has done a stellar job of managing its product costs, meaning they're spending less money to get those clothes on the racks. This is crucial in an inflationary environment where input costs are rising across the board. By keeping a lid on expenses, American Eagle is protecting its profits and delivering value to shareholders. But it's not just about the gross margin. American Eagle also saw its operating margin, another important profitability metric, jump by a whopping 2.4 percentage points to 7.8%. That's a sign of a company that's firing on all cylinders, controlling costs at every level of the business. It's no wonder their profits are soaring. Okay, so American Eagle just turned in a solid earnings report with impressive profit growth and expanding margins. So why are investors so concerned about those sales numbers? Well, the future is uncertain, and that makes investors nervous. American Eagle, like all retailers, is facing some strong headwinds. Inflation is still a concern even if it's cooling off. Interest rates are up, making it more expensive for consumers to borrow money. And let's not forget the upcoming presidential election, which always injects a dose of uncertainty into the market. These factors have led American Eagle to take a cautious approach to their full-year guidance. They're projecting comparable sales growth of about 4%, which is slightly below what analysts were expecting. It's not exactly a doom and gloom outlook, but it does reflect the realities of the current economic climate. American Eagle is well aware of the challenges ahead, but they're not shying away from the fight. They're laser-focused on controlling what they can control: their costs, their inventory, and their brand message. Section 5. Doubling down on growth. American Eagle's ambitious plans. You don't get to be a multi-billion-dollar retailer by resting on your laurels. American Eagle knows this, and they've got big plans for the future. Their goal? To double the size of their business in the coming years, going from a $5 billion company to a $10 billion powerhouse. That's a bold ambition, but CEO Jay Schottenstein is confident they can pull it off. He sees the greatest opportunity in the history of the company. Strong words, but Schottenstein is backing them up with a multifaceted growth strategy. First and foremost, American Eagle is committed to driving sales growth, aiming for annual increases of 3 to 5% over the next 3 years. They're also laser-focused on expanding their operating margin to around 10%, squeezing even more profit out of every dollar of sales. To achieve these goals, American Eagle is pulling out all the stops. They're investing heavily in their digital capabilities, optimizing their supply chain, and exploring new growth opportunities, both domestically and internationally. Section 6. Back-to-school boost, riding the late summer wave. The back-to-school season is make-or-break time for many retailers, and American Eagle is no exception. This year, they're seeing strong performance as students load up on new clothes and accessories for the fall semester. Executives are particularly encouraged by the strength of their back-to-school business in the Northeast region, where they're seeing a resurgence in demand. This suggests that consumers are still willing to open their wallets for discretionary items like apparel, even in the face of economic uncertainty. American Eagle is carefully analyzing back-to-school shopping trends to inform their strategies for the rest of the year. They're paying close attention to what's hot, what's not, and how consumer behavior is evolving. Section 7. Menswear momentum, a silver lining emerges. For a while, American Eagle's menswear business was a bit of a head-scratcher. Sales were sluggish and the brand seemed to be struggling to connect with male shoppers. But there's good news on the horizon. Menswear is showing signs of life. While American Eagle doesn't break out specific sales figures for its menswear category, executives have noted a positive trend in recent months. This suggests that their efforts to revitalize the menswear assortment, with a focus on trend-right styles and improved fits, are starting to pay off. The resurgence of menswear is a welcome development for American Eagle, as it broadens their appeal and reduces their reliance on the women's apparel market. If they can keep this momentum going, menswear could become a significant growth driver in the years to come. Section 8. Stay tuned. The Eagle's flight continues. American Eagle's latest earnings report is a tale of two stories. On one hand, they're delivering impressive profit growth and margin expansion, demonstrating strong operational discipline. On the other hand, they're facing sales headwinds and navigating a murky economic outlook. The next few quarters will be crucial for American Eagle as they look to maintain their profit momentum while reigniting sales growth. Keep a close eye on their strategic initiatives, their performance during key shopping seasons, and their ability to adapt to changing consumer preferences. The Eagle is still flying high, but the winds of change are blowing.